Well, thank God it's Friday, but thank God more because it's time to do 55 minutes of business. That's what we do on Business Incorporated. And here's what we have prepared for you on this episode of the program. UNDP is investing in Zimbabwe's solar project. We'll give you the details in the course of the program. And for the first time since 2022, South Africa is recording some positive net foreign inflow. In Nigeria, tax reform is still on the front burner. We'll have the perspective of the Chartered Institute of Taxation here in Nigeria. You're welcome to the program. I'm Ini John Mekwa. We start from the global space. Oil prices, that's where we're starting from. It's nudged upwards, heading for their first weekly rise since the end of November as additional sanctions on Iran and Russia racked up supply worries, while a surplus on outlook weighed on markets. This afternoon, we see Brent is up, and that's a flip from what we had earlier today, 0.49%, still around $73 anyway, and WTI 0.53%, now at $70. It was at $69 earlier today, so $70.39 a barrel. Both contracts are on track for a weekly gain of more than 3%, as gains about supply disruption from those sanctions on Russia and Iran, and hopes that Chinese stimulus measures could lift demand in the world's number 2 oil consumer surplus. Chinese data this week showed crude imports grew annually for the first time in 7 months. That happened in November, driven by lower prices and stockpiling. Crude imports by the world's largest importer are set to stay elevated in early 2025 as refiners opt to lift more supply from top exporter Saudi Arabia, drawn by lower prices, while independent refiners rush to use their quota. From oil to metal, gold prices edged high on Friday and were set for a weekly gain, driven by report of what's going on in China. Again, they will be resuming gold purchases and heightened expectations of an interest rate reduction by the Federal Reserve. That meeting should hold next week between Tuesday and Wednesday. Now, let's look at the numbers for this afternoon. Spot gold is back up, I should say, because yesterday it was down 0.3%, $2,688.29. So yesterday it was about 2,700. There was a dip and then a bit of recovery there, but we're not back to the 2,700 yet. And US gold is unchanged this afternoon, still at 2,700. Level right there per ounce. Looking at other metals still there, we see that spot silver also unchanged. Palladium is down $969.09, down 0.1%. As well as palladium fell 0.1% and platinum gained on the flip side 0.4% at $933.65. U.S. producer prices rose more than expected in November amid a surge in the cost of food. Data on Wednesday showed that consumer prices increased by the most in 7 months in November, cementing bets of an interest rate cut in that meeting, which is expected next week. Now, let's come to Nigeria. The Niger State Governor, Umaru Bago, has presented a 1.558 trillion naira budget for the 2025 fiscal year to the State House of Assembly. This represents a 48.32% increase compared to the 2024 appropriation. The budget is tagged Budget of Hope for Sustainability and Food Security. The governor is emphasizing that the budget will prioritize investments in agriculture and infrastructure. The total anticipated budget for next year, 2025. Well, the budget breakdown shows that 196.335 billion, that's about 13% of the budget, will be used for recurrent expenditure, while 1.362 trillion, that's about 87% of the total budget, would be for capital expenditure. Presenting it to the House, the Speaker of the Niger State House of Assembly commends the governor for prioritizing security and food security, expressing optimism that it will enhance investment flow to the state. The budget is expected to pass through the House scrutiny and subsequent passing into law. Still in Nigeria, earlier today, as the festive season draws close, we know that a lot of households will be looking the way of poultry for protein in their meals. One of that, obviously, is the chicken, as we see right there. Now, the issue with this is the feed meal in the past month have been on the increase, and this, of course, has affected production and prices at the market. Earlier today, had a conversation on the possibility of automating the process to increase supply.
There are different levels of mechanization, right? Now, there are some farms that can have 1 million birds. There are some farms that can have 100,000 birds. There are some farms that can have 50,000 or 40,000. And same thing for the poultry, the piggery, and the cattle in the same areas where we work. It's important that everyone who hears and knows about the importance of poultry understands and finds their level. Look, you cannot continue to grow chickens in little quantities and feed the country. The large guys, the middle guys, mechanizing can reduce the cost. So that's the way to go. It requires funding. It requires poultry clusters, cattle clusters, swine clusters, area we work well in. It requires silos and grains. It requires feed mill solutions that ensure that there is availability. It requires veterinary doctors. It requires animal scientists. It requires everyone. But we can't say, look, leave it to the big guys, because if you, for example, leave everything to the big guys, as you call them, who have the big investments and all the big money, they will come, they will do what they can do, but then at what expense? Whose expense?
Still in Nigeria, the Port Harcourt Chamber of Commerce and Industry, Mines and Agriculture has inaugurated Dr. Chinyere Nwogu as the first ever president since it was founded in 1957. The River State Governor, Similaye Fubara, who was a guest at the event, is pledging to support the activities of the chamber in creating employment by creating an enabling environment in the state.
We as a chamber will continue to anchor on ideas that will yield economic development and prosperity, access to quality education, quality health services, adherence to the rule of law, protection of life and property. As a matter of fact, these are the fundamentals of drawing foreign direct investments and even local investments. We are ever willing to participate with governments in pursuit of our common goals and aspirations. The task of nation building is a collective assignment. So, expect us, the chamber movement, to continue to give our unsolicited inputs.
What we need here in this state is the enabling environment, the encouragement, and the support. And the state government that I represent, from what have been mentioned here, we're doing our best. The only way we can solve the problem of criminality, reduce crime, it is only when we create jobs. Jobs will create the opportunity to engage our youth. Job will create the opportunity to create wealth.
Now let's talk about that still burning issue in Nigeria. That's the issue of tax reform. Well, a lot of benefits have been enumerated, but it seems there's a lot of convincing that is yet to be done, even though the Taiwo Oyedele group have said that before now they have already spoken to the governors and all of that, but it doesn't seem that way. Now let's look at some high points of this tax reform, which now is supposed to be, they're supposed to be having a conversation with the AGF to find out perhaps loopholes or no loopholes before we can proceed now. Some of those high points from the tax reform bill, which is, I don't want to call it controversial, is funds raised from the VAT, that's the value added tax, will not be mismanaged. We know that Nigerians are very skeptical about paying tax, and one of the reasons is the management of the fund, the issue of transparency in the process of spending that fund. And there's also national fiscal policy that's supposed to be birthed from all of these reforms. They're supposed to show principles and framework around taxation, tell us who should pay tax, how much they should pay, and how should they pay it. and also to eliminate what has now been called the nuisance taxes. So Yedili has been on our different platforms right here on channels and enumerated a whole lot on that. There's also that VAT will no longer be calculated based on where companies have their headquarters, but where the goods are consumed. I think this is the one that's really causing a lot of controversy, especially among the governors in the north, and of course the governors have been divided. Now let's get the perspective now of the Chartered Institute of Taxation of Nigeria. We have their 16th president right here in the studio, Mr. Samuel Agbeluyi. Good afternoon, sir, and thank you for joining us.
Good afternoon. Thank you for inviting me.
Great. So, I mean, I think you were a part of at least CITN, a part of the initial conception and all of the different groups and talking about it. So I just wonder why it does seem like this reform bill is new or is being received as new and causing a whole lot of controversy in different quarters.
It is expected that when you are bringing a major reform to a system, there will be diverse opinion. So I would rather want to see it as diverse, different perspective. But almost everything we have in this bill has been what CITN has been advocating for over 20 years. That is the truth. We've been discussing this, how to make sure that our tax laws, administration and practice can be compared to what we have from outside the country. So we are happy in CITN that the president, that's President Bola Ahmed Tinubu, came on board last year and he exhibited his disagreement with multiplicity of taxes and other issues around the tax administration in the country. And he set up this committee. CITN members were part of that committee. And so even at the discussion level, things were seen from different perspectives, and it is expected that a reform of this nature will have that kind of experience in the making. So now that we are here and we have people, the stakeholders, I call them, have their different perspectives, it should be expected. And it is also good for the system that you have a document that many people are interested in. One thing we have realized is that it has brought tradition even into the fore. Many people didn't want to talk about this. Many people would never want to discuss with the tax men. But today, it has come to the front burner. And at the end of the day, once we are all focused on how to end the discussion positively, then of course, Nigeria will be the best for it.
So the fear now is, while we are doing these discussions and there will be compromise one way or the other, we do hope that the reform would not lose its shine in the midst of the compromise to buy people into it. That's the fear.
If you have followed the argument from whichever side of the divide, nobody has said the company income tax should not be reduced from 30% to 27.5% and eventually 25%. And so some of those, or most of those technical things, they are the reality we must live with. The reduction of taxes and elimination of nuisance taxes, as you have rightly said, nobody can be proud of that. So Nigeria, and for us as tax professionals, I keep on saying this, we've been having this major headache over the years whereby foreign investors want to know, they want to come to Nigeria, and there are things they want to be certain as to how they go, particularly your tax, their tax obligation when they come to Nigeria. And as a tax professional, how do you advise foreign investors as to when it comes, you'll be paying over 60 different types of taxes? And even more than that, how do you advise? And as also a professional, you must not tell lie. So it's been a difficult experience for us, but I tell you, this bill is bringing sanity into the tax space. And I also see it even beyond taxation, because we must first of all look at taxation is a derivative of the economy. So if the economy is not doing well, there's nothing to collect. So if you focus on the economy and you have certainty of what to pay, It also lent credence to ease of doing business in Nigeria. The small-scale enterprise is being given some relief and exception. It gives credence to ease of doing business. So when you put all this together, I've not seen anybody talking against this. But the controversial part, which is the derivation, the political leader could always sort themselves out. This is what I keep on saying. And when they call themselves to the filler, they know the language they speak. But to specifically answer your question, I don't see us losing the benefit of this bill because nobody has actually strongly criticized the technical aspect and those aspects that will help the country. If it is about derivation, then, of course, in CI10 we say derivation and the appropriation of that money is not necessarily an economic matter alone. It has the social matter, the social angle and the political angle. No state in Nigeria will win if other states are losing. So we must have this holistic look as to the well-being of Nigeria so that once there's development all around the country, even the rural-urban migration will go down and the pressure on facility in the city center will reduce. So we need to put many variables on the table to be considered before we look at in the issue of the appropriation or whatever goes to the state or the sharing, if I can use the popular language. So if and once we do that, it will be a win-win situation for everybody. Percentage-wise, you may not get it, but other benefits. And in finance, when you want to take decision, we always look at the quantitative angle. What is the figure saying? But once you are done with the quantitative decision making, you look at the qualitative angle too. What are the factors out there that figure will not ever tell you? So we in CI10 recommend this qualitative. And when we talk of qualitative, in this instance, we look at the social and we look at the political. Everything must be brought to the table.
Mr. Oyedele assures Nigerians that VAT will not be mismanaged. I wonder what mechanism in the bill gives that assurance that, you know?
Well, I also pray. He is assuring why I'm praying, and we are working. We believe everything will work together. Because no matter how good the bills are, and no matter the good intention, once the existing, and I use the word existing, trust deficit is not worked on, it won't give the desired result. No one will give you money when they don't trust you. So, and that is why the discussion that is going on out there is good for the system. Let us discuss, let the bills have the buy-in of all stakeholders. Then you are already doing well in terms of positive outcome or the implementation of the bills. That is on one hand. On the other hand, even the stakeholders, as in the taxpayer, they could see that the government has done a lot for them in terms of relief, exception, and the like. So that is also to say that the government is not always looking for money, way of collecting money from me. This time around, government is bending backward to say, okay, if I manage this X amount of money, I wouldn't be paying taxes. If my company is operating, for example, the company contacts are VAT, the company is operating as we speak today, and the turnover is within 25 million, you are not going to pay. But if you move ahead, now that threshold has been increased to 50 million. So the philosophy behind that decision is that let these people thrive. Once they are successful and they cross the bar, then they can start putting whatever it is expected of them into the basket. So that is communicating rightly to the taxpayer. And it is a way of growing the people we want to have as taxpayer tomorrow. So with this, we expect that there will be more money in the purse, and the government on its side will move and work towards bridging the trust deficit. Attitude cannot be legislated on. So fraudulent activities, not using the money the way it should be used, is an attitudinal issue. And we need to keep on appealing to our leaders to ensure that the people's revenue, tax revenue, works for the people.
Yeah, I guess we'll have to go back to prayers now because the prayer that we started with. But how do you see this conversation ending? I mean, I think implementation is supposed to start by January. And of course, we're in the middle of nowhere now because the Senate, they've paused action because, it has to go outside the judiciary. I mean, the lawmakers for conversation. So how do you see? We hope this doesn't get frustrated and then we forget about it.
No, I don't think it will happen. But I believe there will be compromise. There will be need to shift ground, particularly in the aspect of the controversy concerning the derivation, which is the 60%. Once that is done, other aspects that are less controversial can be worked on. We may not be getting January. I pray we get it. It will help the country. We need certainty. We need sanity within the tax space. That is what we appeal that we get. But again, if you look at the program, if you look at the year, next week we are told President Tinubu will be presenting the budget. That's a major assignment that may take away the attention of the legislator from this bill. But all said and done, it is better to wait and get a good document, near perfect. It's never going to be perfect. Near perfect document that everybody will, at least majority will buy into, and will be, the implementation will be somehow seamless. That will help the system.
What compromise would CITN advise for us to, land on this bill?
Well, just like I said, there are 4 bills. And the area of focus has been the VAT, equality 20%, population 20%, and derivation 60%. Even though that derivation proposal is moving Nigeria away from where we were, where states with headquarter effect were getting massive benefit. The proposal in the bill is not saying that. The proposal is saying it is no longer going to be where production takes place. It is going to be where consumption, because VAT is consumption. It's a consumption tax, lifestyle tax. Now, that is still not okay by the stakeholders. That's why we have this discussion or the different perspective. So we will suggest that we need to tinker with, and what we have brought to the table as a suggestion is that because the issue around the derivation is purely economic, and we are saying add to this economy the social effect. If there's unrest in any state, the money we are saving we still spend to go and quench the unrest. So if there is security challenge, we will still take from the common purse to undo this. So we must not ignore the peaceful atmosphere in the country. So to that extent, we say bring in social variable into it, and also balance the political, because Nigeria is a federation and everything is somehow fragile. So to that extent, we want beyond economy other variables to come on board for consideration.
How would that be captured in the bill? I mean, if we were to go past all of these talks and let's just get it done, how would that be captured?
Okay, maybe we ask the question, how was 20% allocated on population? Because we have 100, 20 was allocated to population, 20 to equality, then 60 to derivation. So what was the scientific calculation that said we should do that? So I am looking at reducing 60%, which is derivation, and whatever is reduced from there can be taken to population. Because whatever money we have, we are using on the people. The facility and everything that is being used by the people, the need to provide infrastructure. So once we tinker with the 60%, whatever is removed there can be taken to population. That, I think, we assuage the concerns of those who have different perspective.
All right, thank you so much for that. That was really helpful, helping us to understand, where we could do that compromise. 16 presidents of the Chartered Institute of Taxation of Nigeria, Mr. Samuel Agbelui, thank you for your time.
Thank you for having me. Thank you.
All right, now let's take a break. When we come back from that break, we'll head to the markets with Anita Edet. Stay with us. Welcome back. Still Business Incorporated on Channel Television. We'll head to the markets now for intraday numbers with Anita Edet. And Anita, this is very close. I mean, the number, it's green, but it's so close at 0.01%. I wonder what has happened between when you got these numbers and even as we speak, not to mention when the markets will close today.
Well, Ini, this was gotten about an hour ago, and I think I last checked the market just about some 15 minutes ago, and it's still upholding that green. And so far, month to date, it is 1.3%. You took the market yesterday, you gave this number. And then year to date, it is still in the positive terrain. It's even crossing to the 32,000% level. So year to date,
so we are still safe.
Exactly. It's almost close to the level of inflation, Nigeria's stock market. And in terms of ranking, in which we'll be looking at how Nigeria's stock market has fared against its global peers. So far, if you rank Nigeria's stock market around the global rivals, it will still be in the top 20, if not top 30.
Should be the top.
Best
performance. Let's head to
top is where it belongs. And
exactly.
Definitely take a look at it here. Nigerian stock market, it has been able to sustain the rebound which we made all the way from Tuesday, Wednesday, and Thursday. So last track of it, the 98,000 points is still very much there, sustained, and we're looking at next week. The market, most of the markets will be trading fully before it goes into a holiday mode, which will be on the 24th of December. That's just about a week and a half away from now. But so far, Nigeria's stock market has gained 0.01% and still holding on to that 98,000 points. But for the Johannesburg Stock Exchange, it was down by 0.31% at intraday. The number also fell all the way from 87,000 points, which we saw yesterday, to about 86,692.88 for the intraday market numbers. So we'll be looking out for how that market will end the close of Friday's trading session. And for the other markets there, so it was a fairly mixed picture for 4 of the major markets that we track across the African continent there. EGX 30, 0.18% up intraday. And that's a 30,000 level of the market. Well, still not anywhere going upwards or downwards, just oscillating in between this level here, 30,795.09. But for the Nairobi Stock Exchange, it was another pullback. We were hoping that the market will cross into 120, but alas, it's down by 0.70% for the close of Thursday's trading session at 118.49, as you can see on the screen there. So that's it for the markets on the African continent. Now we switch pace from equities into the domestic fixed income markets, where we are reviewing how the week has so far been for the country's fixed income markets, talking about treasury bills, talking about the OMO auction, and also talking about the bond, which we see that the circular has just been released by the Debt Management Office. And we have our analyst for today, Ayomide Odesonya, to tell us more about this, how the week has been for investors, and then what to expect in the week ahead of the Christmas break. Thank you for joining us, Ayomide.
Yeah, hi, Anita. Good afternoon.
Okay.
I mean, the week has been quite eventful in the fixed income space. We had an OMO auction on Monday, and this was after, the upper week where we had one OMO auction on Friday. At the OMO auction, 2 long tenor bills were offered. So we had the 351-day and the 365-day OMO bill. I think they sold about 489 billion on the 351-day bill against the 300 billion on offer at 23.95, and sold about 1.07 trillion on the 365-day bill against the 300 billion on offer at 23.98. On Wednesday, we also had the Treasury bill auction, where they sold about 28.8 billion as against the 274.6 billion on offer. We saw the 91-day bill close around 18%, the 182-day bill close at 18.5%, and the 364-day bill close at 22.8%. I mean, the previous week, we had another NTB auction that closed at 22.93. So even though we're seeing more volumes, we're also seeing, the rates decline in the NTB space. So, I mean, what we've actually seen a lot of supply just this week to the markets. Okay.
So now, I'm very curious about this. I just got a report that the yield on the one-year Treasury bills has dipped further, and this is because the Debt Management Office is trying to manage its borrowing costs. So, but how is investor sentiment towards the other instruments within the Treasury bills market?
Yes. So, as I mentioned, I mean, the Treasury bill auction this week closed at 22.8%. About 2 weeks ago, it was actually, that's a discount, closed at 22.8%. About 2 weeks ago, about two auctions ago, the bill closed at, the one-year bill closed at 23.5%. So, I mean, there's been a significant drop. However, I'm not sure it's a thing of, the Debt Management Office managing. It's just more of a demand situation. So, we've seen, we had about, on the one-year bill, we had about 888 billion subscription, right? And it was just about 250 billion on offer on that one-year bill. So it's more of a demand thing. So, I mean, investor sentiment generally, we've seen a lot of appetite for both foreign and domestic securities. So, I mean, on the Eurobond space, we saw how, there was about 202 billion on offer, and subscription was over 9 billion. Even this week, with markets even being in a negative, I mean, the week opened negative. Today, I think we're currently at about 1.5 trillion negative, right? Even with that, we're still seeing a lot of subscriptions, right? As of yesterday, market was negative about 1.2 trillion, and there was an OMO auction. Sorry, on Wednesday, there was an OMO auction, and it was still oversubscribed. So it's the yield dropping is more of the appetite that we're seeing in market. So there's a lot of demand, right? And that has drawn yields lower.
Okay, so that's for this week. And next week is going to be the final full week of trading, because by the Christmas time, we'll be having just about 2 days or 3 days active. But give us a glimpse of what to expect from next week. What is the investment sentiment would be like, and what are we to expect?
Okay, yeah. Well, next week, on Monday, we have the bond auction. The circular was released this week. There's about 120 billion offered across two securities, the 2029 and the 2031, so 60 billion on each. I do believe that we're going to see, significant interest. However, the last auction had closed at about 22% on the 2031 and 21% on the 2029. And for whatever reason, market we've not seen, significant move until maybe today, where, we started to see yields trade slightly higher. So, I mean, on Monday, I do believe that, this demand would still, we've not seen a lot of demand on bonds, basically. So it will be interesting to see, how people will bid on the at the auction on Monday. And I mean, there's also the FAC payments that we expect to come in next week. So I mean, most times, for the Yuletide season, FAC is paid slightly earlier, right? Just before the holidays. So I expect that, maybe next week we should see FAC coming in. So with that liquidity coming in, there's also a promissory note maturity. There's some coupon payments as well. We should see some liquidity coming, maybe not to cover for, the negative. So I feel that might further even push demand, right? So we might just see, even more demand coming next week for majorly bills, and then I think some on bonds as well.
Okay, Ayomide, I think we'll leave it there, and then, of course, keep our eyes out for investors, and particularly the FAC. That will be the FAC for the month of November. So thank you so much for your analysis on the show, and we hope to see you next time.
Thank you.
That was Ayomide Odesonya, fixed income dealer with FSDH Merchant Bank, giving us details about the fixed income market, what to expect for next week, and of course a review of what happened at the market this week. Okay, so from Africa, as usual, we move over to the Middle East, where the Dubai and the Abu Dhabi indexes, a third straight day now, this market has been able to hold on to the gains which initially was removed due to uncertainty over the conflict within Syria, and like I mentioned in the previous session, the uncertainty within the Middle Eastern region, where we still see the Israeli war with Hezbollah. Although there's a ceasefire there, but so far the market has been able to hold on to the greens there. 0.36% for the Dubai index, 4,828.77, and 0.07% intraday uptick for the Abu Dhabi index, 9,282.43 for that market. And for the Saudi Arabia and the Qatari stock exchange, 0.41% for the Tadawul 12,000. That market has already crossed into the 12,000 points there. And the Qatari stock exchange for the close of Thursday's trading session, 0.17%. So for Thursday, it was green, and for intraday, it was also green for the markets that we see on the Middle East region. And from the Middle East, let's fly over to the United States, where we see major averages climbing after Thursday's downbeat close. We saw both the three averages there, they were in the red, and this is after the hotter than expected producer price index, which of course gauges wholesale inflation. It climbed by to 0.4%, up from what was expected at about 0.2%. That's quite higher than economists had expected. But for the opening, ahead of the opening bell, the Dow Jones Industrial Average, which has fallen for about a 6 consecutive session, is pointing upwards earlier in US before the opening bell, 44,063.00, up by 0.20%. S&P 500, 0.26%, while the Nasdaq is down by 0.57%, no thanks to losses from the likes of Nvidia and some other tech stocks. But now, for the week, the Dow is heading for about 1.6%. S&P is on pace for 0.6% drop, while the Nasdaq has outperformed and is on track for a 0.2% advance for the period. Friday is also marking a light day for economic data. What we're expecting, import and export data would be due out later today. But for a review of Thursday's trading session, let's bring in our Washington correspondent, Myra Bird.
The U.S. stock market had a challenging day, despite the fact that President-elect Trump rang the opening bell. Many investors are a bit concerned about the inflation reports. It is indications that there could be no interest rate cuts before the end of the year, as the Dow Jones had its longest losing streak since April, closing at 0.53% down. And the S&P 500 also closed down at 0.54%. The Nasdaq led the way in losses at 0.66%. down. Many investors are a bit concerned and watching to see what will happen over the next few weeks before the end of the calendar year.
Our Washington correspondent, Maria Bird, giving us details of how Wall Street ended Thursday's trading session. Okay, so now take a look at your board there. Asian markets, well, China was actually the leader of mostly negative sentiment that we see here for the close of Friday's trading session. The Nikkei was unchanged, and then we also saw the Tankan survey of manufacturers, which largely boosted investors' confidence there, but it was slightly unchanged. And Kospi has been able to make some gains, so fairly mostly a negative picture there for most of the markets around the Asian region for the close of Friday's trading session.
All right, Nisha, thank you so much for that.
Pleasure.
Let's head to Berlin now, where the German economy, once again, not very good news coming from there. The growth engine of Europe, as we've known it to be, has been in the doldrums for a while, and that's because of strong labor markets. That's been the only good news for months on end, and now that's the labor market. Seems that good news is getting off, is being eroded. Well, this is according to a survey that has been shared. Lars Holter has the details. Hi, Lars. Good afternoon.
Thanks for having me, Ini. Well, it certainly doesn't look good. A survey that came out yesterday says that 4 out of 10 German companies are planning layoffs next year, that as they are less optimistic about their business in general. The same is true when it comes to planned investments. 40% are planning to invest less. Only 23% are planning to invest more next year. Crunching the numbers, the German Institute für Wirtschaft, that is the institute behind this study, and they are generally well connected and showing a bit of a pro-corporate slant. Now, they are saying that pessimism is the highest it's been since the global financial crisis in 2008. Furthermore, they are saying that talking to the 2,000 companies that are part of their ongoing study, they see, quote, no signs of an economic turnaround for Germany, which means the weakness we've seen over the past year or two is likely to drag on. And yes, it is now pulling labor markets down. In a major turnaround in itself. For 15 years, labor market participation has grown in Germany, and now it looks like we're not only losing jobs, but even worse, that we might not just see temporary cuts, but that we will see a long-term reduction of jobs.
Yeah, that's scary. But what sectors do we know?
Well, that's maybe the worst part of the news. It's many. It's almost all of them, as a matter of fact. For a while now, of course, the industrial sector has been doing badly, and that is the most important sector of the German economy. Let's just look at the auto sector. Volkswagen is planning to close 3 plants and cut tens of thousands of jobs, but Audi and Ford have also announced cuts. Add to that auto suppliers like Schaeffler, Bosch, and ZF with between 7,000 and 14,000 cuts announced. And Siemens is playing layoffs, as is steel giant ThyssenKrupp. And this morning, chemical firm Evonik announced another 7,000 layoffs. So all across the industry, it's really a bloodbath. But the situation isn't any better in the construction sector. And now we're hearing more pessimism in the service sector too. So the situation seems to be really broad-based. Even worse, the language we're hearing and some of the details about these announced job cuts. Many companies aren't looking into reduce working hours or similar schemes anymore. They are just outright cutting jobs, likely not expecting to bring them back anytime soon. They are also, in many cases, no longer talking about a recession, but they're talking about a structural crisis. And that, very honestly, doesn't sound like something you come back from very easily.
Well, it looks like it's not going to be a very easy 2025 for Germany. But let's look at investors this afternoon. What are they doing?
Well, the European Central Bank has lowered interest rates yesterday, as had been expected, but it didn't really move markets at all in a way that could be surprising, as lower interest rates are usually what pushes investors forward. But in this case, of course, that rate cuts had been expected, and it happens as markets are at all-time highs. Yeah, it was a little bit of a tricky situation. So maybe it needs just more than that to forge ahead. Staying with interest rates, there's rumors in the market that the Fed in the US might, after all, not be lowering rates as aggressively next year as some had been expecting. Who knows? But for today, speculations over interest rates is really all we got. There is not much out there in terms of corporate data. So let's see where this is taking us on this last trading day of the week.
Yeah, we'll certainly see, Lars. Thank you. All right, let's come to Africa now, starting with Zimbabwe, where the country's gross domestic product plunged to $35 billion in November, reflecting the impact of severe drought, rapid currency devaluation, and global commodities market instability. The grim data released signals deeper economic shocks ahead. This is a warning from economists. And President Emmerson Mnangagwa said that GDP had surged 194% to $47 billion from 2018 figures. However, the Zimbabwe Public Debt Management Office reportedly recently that GDP had contracted to $35 billion, wiping out $12 billion in just 7 months. And this represents a 25% decline between April, when the president delivered his speech, and November, when the 2025 national budget was presented. Still in Zimbabwe, the United Nations Development Program has invested about $60 million in solar and irrigation projects for the benefit of rural communities to promote a sustainable and eco-friendly approach to rural development. In an interview, the UNDP resident representative in Zimbabwe, Ayodele Odushola, said that the global organization offered support through the Health and Childcare Ministry, as well as the Energy and Power Development Ministry. For 2024, the solar project had provided 13.6 megawatts of power, accounting for about 1% of total electricity generated in Zimbabwe and about 35% of power from independent power producers. Currently, Zimbabwe has an energy deficit of between 1,600 megawatts and 1,800, as climate change and a lack of foreign currency have hampered electricity production from traditional sources. Afreximbank is in talks with Zimbabwe's government to explore ways to extend funding for infrastructure and mining projects. And this, according to Zimbabwe, this effort is part of the bank's intra-African engineering procurement and construction, as part of intra-African engineering procurement and ways to impact the continent. The multilateral lender consolidates existing products to promote African participation in large-scale infrastructure projects, and it aims to drive EPC value chain growth through financing, facilitation, and support for various stakeholders, including government and financial institutions. We head to South Africa now, where the rand slipped in early trade today against the dollar after the central bank released its quarterly bulletin. The rand traded at 17.855 against the greenback, about 0.4% weaker than its previous close. The dollar was last up 0.13% against the basket of other major currencies and heading for its best weekly performance in a month, as investors priced in the possibility of Federal Reserve reducing rates more cautiously next year. We're still in South Africa, where the net foreign inflow to markets since 2022, a total of 45.6 billion rand. In the third quarter, non-residents bought 41.4 billion rand of local debt in the period. And there's the first net inflows by foreign investors to its debt since 2022. It's said to have been encouraged by a coalition government committed to boosting economic growth. Portfolio inflows total of 45.6 billion rand. That's about $2.7 billion. Well, now let's head to the crypto space now and see what's happening right there. Well, I see red on the board. So even though we still have that 100,000 level, we've lost some percentage right there. I know yesterday the price went up to about 103,000. Thereabout. So I guess we should expect profit taking. It's a norm in any market, yeah? So it's 100,000, 148.62, lost some right there. And of course, it's down 0.76%. So it drives the other coins in the crypto space more red that we have this afternoon. Now, let's see some trending stories. At the crypto space. Binance, for instance, has recorded $24 billion inflows in 2024 as the exchange surpassed the 100,000 trillion level in a lifetime trading. So this is accumulation of what are some activities in the crypto space by Binance for the year. The leading crypto exchange was accumulated more than 24 billion inflows, and this growth aligns with a surge in global adoption of the digital assets. We know that Binance is really popular in a country like Nigeria. Nigeria also is part of that adoption, new adoptions for the year. Also in the crypto space, we see that the SEC issues settlement demand to Elon Musk. Elon Musk, we know him by now, of course, the very rich guy that does elite products. In the United States, the Securities and Exchange Commission chair and the agency led by Chair Gary Gensler has issued a Musk issued Musk a settlement demand, warning of potential enforcement action unless he agrees to a deal within 48 hours. The private discussion became public when Musk, now a top advisor to President-elect, we cannot leave that out, has revealed a letter from his lawyer, and the SEC's probe focuses on his 2022 acquisition of Twitter stock, which they allege may have involved delayed disclosures and possibly giving him an advantage in securing a large stake at a lower cost. So 48 hours, we should get an agreement right there. And then away from that, we do have a report of a major breach that happened with a hacker stealing 15.9 million Coinbase commerce, bypassing AML detection. One of the fears of, well, will I say those who are skeptical about the crypto space are that there might be some not so tight measures right there. But let's talk to Solomon Amunde now on these issues and more. Hi, Solomon. Good afternoon.
Good afternoon, Nini. Good afternoon.
Yeah, so we see there's been a little bit of drop. Well, I guess it's just natural. Talking about the price of Bitcoin now. Yesterday we got up to about 103,000. Now we're on 100. Can we say that 100,000 would be a new resistance point?
No, not really. I wouldn't say that's the resistance. I still feel we have the strongest resistance between $88,000 and $92,000. But we've seen Bitcoin hold up and trying to establish a support at around 99 and 100,000. Seems pretty interesting. At least it presents the opportunity for it to make another leg up early next year to about $115,000, $120,000.
Yeah, so I guess the 25% or 25 points cuts, at least that's what is being expected. That's what economists are pricing in or talking about the Federal Reserve meeting next week. Do we see that already priced into it at this time, or should we expect a movement?
No, irrespective of the cuts, it will have little to no significance, negative significance rather, on the crypto markets. Why? Is because the bigger picture is the day that President Trump will make his opening speech, and also take his oath. That's like the bigger picture. So most persons are not really concerned about the cuts that will be happening later on this month because of the bigger picture. So I would say it has little to no effect, negative effects rather, on the crypto market.
Okay, so now this issue with Elon Musk and SEC giving him 48 hours for them to have an agreement, knowing the relationship between Elon Musk and Donald Trump, does it move the market or investors anyway?
Yeah, definitely. It will move the market. Trump is pro-crypto, Elon Musk is pro-crypto, pro-innovation, pro-AI. Yeah, so from first quarter of next year, we should see very exciting stuff happening. I mean, that's why Bitcoin has rallied past $100,000. It's because of the ripple effect of President Trump and also the support of Elon Musk and also the direction that the US will be going with regards to cryptocurrencies, blockchain, and artificial intelligence. So everyone is very much excited for what's to come next year.
Yeah, but is it too late for interested investors at this point?
No. Actually, it's extremely still early. It's still very, very early for investors because right now the crypto market was just able to beat its previous all-time FDV. And we're still at close to $4 trillion, 3 point something. So there's still a huge gap that the market can still grow. The market can still do at least 100% growth. So it's possible that within the next 1 year plus, we can see the fully diluted valuation of the crypto market get to about $8 trillion. So if you look at it that way, there's still lots of opportunities for new investors in the market, actually.
What price action, what direction of the price action do you see this weekend?
No, I feel that Bitcoin will consolidate. So I see it consolidating between the range of 97,000 and 102,000. I see it consolidating till next week and most likely till the end of the year. I don't see us going below $8,000 again because of if we should go to even 1992, there are lots of VCs and companies and also countries looking to buy. So they'll scoop up the supply and to go back up again. So basically, I'm not too much correction from the market.
Are the institutional investors, are they still piling up?
Yeah, definitely. They have not even really started. There are still more institutional investors that will jump in and will accumulate more and more Bitcoins. In fact, we will soon start seeing countries start them accumulating Bitcoin from like next year, trying to set up their Bitcoin strategic reserve. So like I said, the demand for Bitcoin right now is at all-time high. We've never seen this much demand for Bitcoin before in the history of Bitcoin. And it will increase definitely.
All right, Solomon, thank you so much for sharing your views with us this afternoon.
Thank you very much, Amy.
So that's it on the program. Thank you so much, Early. Thank God it's Friday. It's time to head into the weekend. But even as you enjoy your weekend, do remember to go to our YouTube channel and watch any episode of Business Morning, Business Incorporated. Have a fun-filled and restful weekend, but stay informed. That's what we do for you. I'm John McQuarrie. I'll see you tonight for the stock market reports.